Need to submit your company accounts and wondering what your options are? Well, watch on. As business accountants, my team and I spend all day long helping business owners on their journey. And as a result, one of the things we talk about, of course, every day is what types of accounts you need to submit and where and how and what the options are. And in this video, I just want to briefly talk to you about what your options are as a limited company owner in terms of what you can submit to Companies House. So we're not going to be talking about the tax side of it and the tax returns, but actually what information is going to be submitted to the kind of the public record and people can visibly go on and see that. We've actually done other videos talking about the kind of information you can find in the public domain. So this one's just going to be whizzing through the options available to you. But before we get into it, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more video just like this one. So company accounts, what are your options? So really there's kind of four main types that I want to talk about in this video. Let's talk about the first kind of easy one, and that's dormant accounts. So if your company physically hasn't traded, they've done nothing, there's been no significant accounting transactions as the standard sort of says, then you can submit dormant accounts. I don't want to go too deep in this video into whether you're actually dormant. There's at least 2 other videos on the YouTube channel that tell you about what sort of things would be classed as dormant, but let's just presume, keep it nice and easy. You formed this company over a year ago, you've now come around to doing your accounts, you've done literally nothing with it, then you have the option to submit dormant accounts. There's actually a free tool that's fairly straightforward, and I don't say this lightly with limited companies, but actually with dormants it's not incredibly difficult, but you still do need some accounting knowledge to be able to do it. But there is a tool you can do that, and you can submit dormant accounts. If you still want professional help with that, and the vast majority of people still do, then it's not a particularly expensive thing every year to have that done, but you need some dormant accounts submitted, and those accounts really show the balance sheet or the statement of financial position as it's often called these days, and that really just shows the amount of money that's been invested in shares and the amount of money the company has. So quite often it's literally that the company's got £2 and you've had £2 in shares or something like that. There's not a lot going on, and there's very little. There might be a couple of notes to the accounts or something, but all that will happen is if anybody wants to check those externally, they'd know the company's dormant. That's it. So that one is fairly straightforward. The only thing I think it's worth mentioning on there, because people do get confused about it, is if you search on Companies House, if you Google Companies House Beta, B-E-T-A, you can go in and type any limited company you fancy in there and you can see your own company. So do that, look at your own company, it gives you all the key filing dates. And you might see that it will say active on there. Now don't confuse that with it meaning that it's trading, it just means it's active, it's live on the register. So when you see, you can still submit dormant accounts even if that does say active. So just a little tip there, bear that in mind. So then let's talk the other end of that. Let's say you have been trading, you have the option to submit full accounts. Now the full accounts are the one that you would submit anyway with your company tax return to Revenue and Customs. Revenue and Customs want to know where you're spending your money, how much money you've come in, that's come into your business, where you've spent it in terms of categories and all the rest of it. They want all that data, but that's very private and that goes with your corporation tax return that we're not going to talk any more about in this video, but just know that you do need these anyway. But in terms of what you can submit to Companies House, you don't have to, as a small business, submit those. Now, if you Googled like BT Group PLC or whatever, you'd see they have to submit full accounts. They're a big PLC, that's what they do. And actually, there's a lot of snazzy work that goes into producing this massive set of accounts that they do with all these other wide and wonderful things that sort of make that a nice thing for investors to look at. But for you as a small business owner, which is what we always talk about in these videos, you don't have to submit full accounts. And in fact, most people won't want to, because you don't really want to your nosy neighbours, your competition, other people, maybe even your customers. You don't want them to see what actually you're earning or not earning and what size of business you are, your turnover, where you spend your money and all that kind of stuff. They don't want to see you spent 20 grand entertaining your clients last year and all this, this kind of stuff. So generally small business owners won't do that. I have seen it just on random, being the saddo I am, on the random times I have a look at companies that are out and about there and you think, why have you submitted those? I can see everything. It doesn't make your company look very good. So generally you're not going to submit the fulls to anybody other than HMRC, HM Revenue and Customs. But I will talk about your other options in a sec, but just know that is possible. You could submit it. And obviously, if you're a large company, you've got to anyway. So what are your actual options then that's left? Well, there's kind of 2. You might hear this term micro entity. So that gets used a lot, micro entity accounts. It's under the accounting standards, they're a different type of accounts. And basically, they're the ones that have got the absolute minimal detail that you need for a sort of a trading company. And they're quite popular in the accounting world. Personally, for the reasons I'm going to talk about, we don't tend to submit them because really it's the similar type of work to put together a set of those than it is the slightly better ones. And actually, if you've got external investors or lenders or other people that want to see the accounts, you're better off with the kind of fourth option I'm going to tell you about in a minute. But so let's say micro entities. So what micro entities will do is effectively they will take off that profit and loss report. So you've got two main reports in a set of accounts. Yeah, there is other ones you could have, but there's two core to every set of accounts, and that's going to be a profit and loss and a balance sheet. Now, the profit and loss is the one that shows here's your income, here's all your expenditure, and where you've spent all the money. That's the one you don't really want in the public domain. So that gets left off, and you end up with just a balance sheet that shows kind of the overall health of the company. And there are some insights to the kind of the keen eye, but even then it's very difficult. So if I had a set of micro entity accounts, there's only so much data I can glean from them because there just isn't enough detail in them. So you have very limited notes that they have to declare on there and things like that. So a lot of people will use them as almost the ultimate privacy protector. The downside to that, of course, is that actually when you do need to share it to some limited party like a bank, a lender, an investor, then unfortunately there's not going to be a lot of detail that can be gleaned from that, and credit scoring agencies and the like can sometimes find it difficult with the amount of detail in there. So if you've got any kind of want to potentially have lending and things like that, they tend to be ones that we steer away from. But there are plenty of accountants that will do that. It's personal choice and preference and experience of working with clients, but we tend to use the other option, which is what was known as abbreviated accounts, or these days they're called filleted accounts. So you've got your micros, they're no profit and loss, really minimal notes, really minimal detail. And then there's kind of a nice middle ground between the fulls and the micros, and that's these abbreviated / filleted accounts. So no profit and loss. So again, you're protecting all that real in-depth data about the size of your business to a degree. You can't see how much money you've turned over, where you've spent your money. But what they have got is more detailed notes. So it might show like how many employees you've got in the company, or it might show a bit more detail of some of the breakdowns of the balances on the balance sheet. And that can really help a learned eye look at it and make some decisions. I still think that Joe Public looking at a set of accounts as a filleted set probably won't be able to get much more detail out of it than they would if they'd seen the micros. But to people that really care, there's just that little bit of extra information that you can do. Credit references find it easier. There's all these other little small benefits. But yeah, for us, that middle ground tends to be a better set of accounts. And for you as the owner, I think if you care about your figures, you're going to want to have a look at those as well. But they're a nice middle ground. So filleted, abbreviated as they're known. And then the other thing I should say on those abbreviated / filleted accounts is that basically you get a bit more flexibility with some of the accounting policies. And I don't want to go into too detail on it because it's quite a technical thing, but it gives you the flexibility to choose certain ways of doing things, which might make your accounts look better, again, if you're thinking of lending or something like that. So for me, they're just a bit better of an all-round middle ground for future, because you just never know what you're going to want. I think if you've got any aspirations of kind of being a solid growing business, they're going to be the ones for you. But you do have these options. And again, if you're looking like, I've got a very tiny business and I want to get it done as absolutely cheaply as possible, maybe offshore, they're probably going to produce micros as a default because they're the most simplest. So sometimes what you're doing and who you're working with might dictate that, but it's worth you being educated enough to be able to ask your accountant about what kind of sets that they would submit for you so that you're comfy that they're going to be right for you. So there you go, that's the main 4 types. You've got dormant. If you're actually dormant, check out those other videos, and then your choices are really full, micro, or filleted. So there we go, they're your main choices. So hopefully you are now going away more educated about what people can see and what your options are. If you know anybody that would benefit from this information, please do share it with them, and we'll see you in the next one.